What's going on, guys? So economic trends are extremely important to note and keep watch of, especially if you're an investor in the stock market. So what we're going to do today is go over 4 economic trends that I want you guys to keep an eye on throughout 2019. And of course, guys, if you're brand new here, hit that subscribe button down below. Don't forget to hit that bell notification as well. And smash that like button. Let's try to get 100 likes on this video. But anyways, getting right into this video here, the first thing I want to talk about is consumer confidence. So consumer confidence or consumer sentiment is very important because it shows you the general sentiment thinking of the general public, the consumer. Now, as you can see here, we've pretty much been in an upward trajectory when it comes to consumer confidence since the recession in 2008. Where we had a few years of neutral kind of consumer sentiment, but we've since resumed that and did an upward climb in the last couple of years. Now, a couple of things that have obviously helped with this has been the strong US economy and, of course, massive gains in the stock market over the last few years. And as you can see, this chart pretty much mimics the S&P 500. And you can see every time the S&P 500 rallied, the consumer confidence grew significantly as well. And if we had a correction in the S&P 500, it dropped as well. Now, despite the volatility we saw in Q4 2018, we can see that we've only really retraced back to levels from 2018 summer, which was still an overwhelmingly positive time. Now, even these levels show a very high consumer sentiment because with the announcement of companies like Amazon who announced record sales in the last quarter, that really shows us that consumers are still out there, still confident in the economy and still spending. But now with the holiday season over and no real driving catalyst for the next few months, this could have a negative impact on consumer sentiment if volatility continues in the market. However, on the flip side, of course, if the VIX drops and the market isn't as volatile here in 2019 and we start moving up again at a slow pace, you will also start to see consumer sentiment increase at a similar pace as the S&P 500. Now, it's very important to keep an eye on this throughout 2019 because remember, if consumer sentiment drops, people aren't going to be spending as much out there, and as a result, the economy is going to suffer, and as a result, we could potentially enter a recession. Now, the second big metric I want to take a look at here is home sales. Housing is a market that investors always pay close attention to, and if you don't pay close attention to it, you should start that right now. Now, the 2008-2009 recession that we had in the US was due to the housing market, but at the same time, the stock market did have massive losses as well. Now, there's a couple of things with the housing market that have started to raise a few red flags and has some of these analysts watching this very closely here. So the first red flag is really that home builders are facing increasing costs, and that's because both of labor costs and material costs as well. So lumber tariffs have actually put a pretty big toll on these home builders, and as a result, they've had to raise their prices, and as a result, new home prices have been on the rise as well. Now, just because new home prices are rising, it does not mean that people are willing to pay for that, and that's exactly where we're starting to see a problem right now in the US. Now, of course, the next big red flag, which we need to keep a close eye on, is the Fed. So in 2018, they had 4 interest rate hikes. In 2019, they're projected to have 2 more interest rate hikes. And naturally, if interest rates start rising and continue to keep rising, it will be more expensive for people to go out there and take out loans to pay that interest. And as a result, demand for these homes may start dropping significantly. So now if we look at the chart here, it's pretty clear that these factors did have an effect on new home sales and even existing home sales in 2018. It's pretty clear from this chart that both these graphs are showing a downtrend in the short term here. Now, if we see things like the Fed hikes continue or trade tensions continue throughout 2019 between the US and China, then this downtrend could very well continue and could continue at a more rapid pace. Now, the third indicator we need to look at here is manufacturing numbers. So manufacturing is actually a big indicator when you want to look at the health of an overall economy. Manufacturing numbers kind of gives you the general idea of how the economy is doing. But the problem here is recently we've started to see that these numbers are starting to look a bit concerning. So as you can see from this chart here, a number of 50 actually indicates an expanding manufacturing sector. But as you can see, we've had a sharp decline in 2018 and we're getting much closer to that 50 mark. Now, another big cause of this, of course, like the previous issue, was tariffs. So if trade tensions continue in 2019, we might be getting much closer to that 50 mark, and this could be another signal to potentially put us into a recession. Now, the fourth and final chart that you need to monitor in 2019 is the US trade deficit. So 2018 was all about trade, tariffs. So will 2019 be different? Possibly. But the problem now in 2019 is that we're actually starting to see effects from 2018's tariffs and trade issues slowly trickle into the economy and companies and how they're performing. So in Q3, net exports of goods and services actually brought down the GDP by around 2 percentage points. And this was also seen from many companies in the last earnings report, or even the earnings report before that, where they did state that some of their slowdowns was because of the trade tension between the US and China, and of course the rise in cost of materials because of the trade tensions. And more often than not, these things contributed to slower growth than they expected. Now, as you can see from this chart here, monthly merchandise trade numbers from the US Census Bureau shows that the US exports to China have actually fallen in the second half of 2018 on a year-over-year basis. October goods exported to China were down around 29.6% from a year earlier, which is a very sharp decline as well. We're also getting pretty close to the levels that we saw here before 2008, that was right before the recession hit. But this is where it stands right now, and I would say this is more of a short-term pain issue than a long-term issue if we can get things resolved. And that's kind of really the key here to help all of these factors really. If we can get some sort of resolution between the US and China with these trade tensions in 2019, most likely before March, because that's when everyone's expecting some sort of announcement, that's when we'll see, in my opinion, a big boost to the economy again, not only the US economy, but also the Chinese economy. And I think we might have a similar year to possibly 2017 if these things can die down. So throughout 2019, I encourage you guys to follow these 4 indicators on a quarterly basis. And come back to this video in, say, the next couple of quarters and let me know how things are holding up. I will try to keep you guys updated with this. I will try to post an update video later on in the year to see if these indicators actually showed us what was coming. But I would also love to see your input and your research on this as well. Guys, I would personally love to see some sort of resolution between the US and China, because it is dragging out and it is causing a lot of investors to start panicking here in the market. Now, if we do see some resolution, I think a lot of these charts will reverse and will start to go back up, giving us a much more positive outlook for the rest of 2019 and even going into 2020. Thanks for watching, guys. Hope you learned something new in this video, and if you did, hit that like button down below because we were trying to get 100 likes on this video. Either way, guys, thanks so much for watching. Don't forget to invest positively. I'll see you in the next one. Peace.